I'm leaving for a destination I still don't know. Somewhere nobody must have duties at all. And if you like this, you can follow me. So let's go. Follow me. And let's go to the place where we belong and leave our troubles at home. Come with me. We can go to a paradise of love and joy, a destination unknown, no, 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 destination unknown. The crowd, the air is clear, ocean's blue, I love that sound. We're happy for this destination we found. And if you want this, you can follow me. Let's go, follow me. And let's go to the place where we belong and leave our troubles at home. Come with me, we can go to a paradise of love and joy, a destination unknown, no, 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 no.
Just feels tight. Just feels tight. just feels tight.
Santa. One of you watching this, or whoever's going to be watching this later, you never know. I usually get about a dozen streams. But guys, welcome. We are live here at Scrooge's Juice Bar, where we try to find you the juiciest plays on the internet every single day, or on the stock market every single day. We do a rundown daily at 3:00. Guys, we call this the blue collar edition, meaning simply enough, we try to find plays that are specifically designed for those of you who might not be able to be here at the opening bell, or for people who just would like to find some later in the day trades. Finding an end of the day strategy, and throwing a little, cherry on top of a winning day, or maybe getting back some of your gains when you had a bad one. It's very, 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 it's nice. It's nice to have that. So we run it down every single day. What we do is we do a short. We go over any kind of short squeezes that are currently happening. Those are hot right now. GameStop, AMC, people still waiting, holding bags, wondering what's going to happen. I am not joking with you guys. I've seen a guy who was in for almost $1 million, and he was down like 300 or 400K when it really started tanking, and he was posting a lot about how he had diamond hands and he was going to stick it out. I'm sorry. Sorry. People are losing money. This isn't funny. I'm sorry. But yeah, he just stopped posting. I don't really see him posting anymore. And I hope he's okay, to be honest with you. I worry a lot, about people who trade that way. So, here we try to give you a better way to trade, give you a way to find your own short squeeze plays. The second thing we're going to go over are swing trades. We like to look for any kind of insider transactions to give us an indication of how we could swing trade some trades overnight. We also do straddles, which we did yesterday. If you guys were here, you've seen some of that, and you might be excited to find out how that went. I'm going to tell you that it was a little wild. It was a wild ride, okay, for sure. Nvidia was. Whew, there were times where I really just didn't know what to do, right? So I'm going to go over everything from yesterday, all the plays that we called. Just kind of run that down for you guys. And then we're going to do end of the day spread that has the ability to double your account every 3 months, has a 90% success rate. We are going to actually start the challenge for the spread next week. We are going to take one today, but it's not going to be on documented. It's not going to be on the logs. We're just going to do one for fun. But next week, I really, because I don't want to trade tomorrow. So I figured why start it now and just have one day and then 4 days off. So next week, Tuesday, we're going to hit the ground running with the challenge. We're going to go ahead and take $5,000 and we're going to double it right in front of your guys' eyes. It's going to be fun. All right. So here we go. Starting this out, guys, we got a short squeeze report. Let's talk about the short squeezes from yesterday, okay, that we caught that we've been looking at. So if you guys didn't see it, let me go ahead and find it for you. All right, this was me on Discord 2 days ago. Okay, this was me seeing two plays that were squeezed. I got it in the morning. I seen them, and I'm like, okay, I'm gonna ride these babies down, And I went ahead and got puts on both of them. Now, it didn't work out the way I thought, and I want to talk to you about why. Let's talk about it, okay? So when you got into, I'm not going to get into my broker, but I'll just tell you guys how this happened, okay? So all right, everything's still running well. All right, so I wake up this morning. I'm like, okay, Barnes and Noble, this guy here, lost 40% of its stock price overnight. I got the alert this morning, and I thought it was Christmas. I was like, Santa? No Santa. So what had happened is that all that movement, 40%, okay, bringing us back down to about 70 cents, which I'm at a 50-cent put. So at this point, I'm like, man, I'm only 20 cents away. It just rocket shipped back. I didn't make any money. So what I did is because I already closed the position at this point because I ended up breaking even and I got a little. Well, no, I'm sorry. At this point, okay. So at this point, what I did is I go back into the history of the option, okay, not the stock, and that's on Robinhood. Okay, so I'm looking at the history of the option, and what I noticed is that even when you go back in Barnes and Noble, back to before the squeeze happened, where it was at 16 cents, that 50-cent put was only worth like 45 cents. So I get in at 30 cents, which is a terrible, terrible entry now I know. And the most I could have ever hoped to achieve, even if it parabolic all the way back to 17 cents, which is going to take a little while, and then you got to think about time decay because I'm a month out. But what if it takes 2 weeks to get down to 17 cents? I would still end up losing money. So I did the math really quick today and figured out that I was going to lose money regardless and decided just to get out of the play. It didn't make sense to me, right? But maybe that's something we can do moving forward on these type of plays because especially when you have option contracts that you've never seen before, companies that you've never seen before, stuff exactly. Yeah. So the reason is because there's so many other metrics in play, right? Like the total value of the stock, how much volume is normally in the stock. There's all these metrics in play. So they actually, for you guys, have a options calculator where you could go and plug the company into this calculator and get an idea of, okay, if it moves $1, $2, or it moves X amount, how much am I going to make back? Now, to me, that always seemed really tedious, and I didn't want to trade like that. But what I did this time, or what I came up with, I thought worked just as good. So you add it to the watch list before you enter, right? Let's say I'm watching something spike. I'm going to add it to the watch list on Robinhood. There might be another way to do this to actually see the history of the options contract. This is just how I know how to do it. Then you go back to your main page and you press that option contract and it'll bring you up that chart history. You can go back a week or two and go back to whatever day that it was low as heck and get an idea of the total top high side of this contract before you even get into it, right? So if I'm buying in for 30 and I see that it was just trading at $4 like 2 days ago, heck yeah, I'm jumping in because even if it gets only half of that back, I speculatively could make $200 on this trade. So if I would have looked at that first and seen that the most I would have made was $15 and known that it wasn't probably going to get back to 17 cents, it was probably just going to get low. So just doing the math in my head, I'd be like, man, I'd only make $7 on this, I'm good. When I get into an option, because I'm a real small account, I want to get 30% or more every time, 30, 70, 100, over and over and over again, right? So that's the ones that we were talking about yesterday. I posted that screenshot. Did you guys see it? Yeah, this. Okay. So I woke up. Now, BuzzFeed, I did not get into. I'm so mad. I didn't have the cash in my account to play it. If I added it to the watch list, I could have told you how much no, sorry. I did add it to the watch list. It was 100% gainer. It went from $50 to $100. So I missed BuzzFeed. I totally called it, but I missed it. But Barnes and Noble, I held it till this morning when it absolutely collapsed and I still didn't make any money. So like I was right on my calls. Oh my gosh, was I right? Did you guys see the other one, BuzzFeed? This I called it up here. This was the open right here. So, shoo. So anybody, that's why you got 100% on your contract. Anybody that jumped in that made money, but I just didn't have the cash available. I was already into a bunch of other plays. So, and I was just a little short too. I should have just made a deposit, but it doesn't matter. Missed plays don't matter. Don't FOMO. There's always going to be more, right? So guys, if you're still here, I did want to talk to you guys. Okay, so the only other one that I seen today that was breaking out was ERAS. They don't have any contracts that had any volume. They do have contracts, but they have no volume at all. When we came over here to ERAS, and you go into the option, you'll notice that the buyers and the sellers do not agree on the price. Okay, this show I talked about this yesterday in pretty good detail. This shows low volume because if there was more volume, they would push the walls closer together, and your bid and your ask would be right next to each other, like when you see on SPY or anything with high volume, right? So something like this tells you that you're not going to be able to get out of your trade. You might not be able to get out of your trade. There's no reason to play it. And by the way, this isn't just the first, or don't just look at the first strike. Go one strike up, go one strike down, go two strikes up, two strikes down. See if that option moves a little bit, if you're even going to be able to get out of that contract. Because if it doesn't have good volume, a few tiers down, you might get stuck. And I say anytime you see this kind of stuff, just throw it out the window. So, that one I just wanted to show to you guys, but I would not keep that on my list. I would not watch it. DJT, I wanted to talk to you guys about. This is the play of the year. Okay. This has been on the short squeeze list for a very long time. The shorts don't have any more shares to borrow. Okay. The interest rates are going through the roof. Okay. When this thing squeezes, it's going to at least double up, if not triple, if not more. We've seen them go 10 times, we've seen them go 100 times. So like if something like this went a 10 time, I mean 100 for something, big cap probably not, but a 10 time swing right now going up to $450 in a moment in an overnight swing. Yes, I have shares. Yes, I am in on DJT. So that's where we're doing on that. So the last thing I wanted to show you guys is yesterday we went over like 4 different ways to find short squeezes as they're actually breaking out. I just realized it's all right here. So when you're in trading view, you just have to go up here to markets and stocks and then go to top gainers. Now from here, they're going to give you everything that spiked during the day. Okay. I haven't noticed a lot of consistency with these, but we've seen squeezes during the day, during the morning time. I mean, squeezes happen anytime, right? So I haven't, hasn't nailed this one yet. But the after hours gainers, this is how I came up. Oh, no, sorry. So this list will pop up after hours. This one's pretty good to just see like what's going to run for the next day and kind of get yourself, a list for the next morning. But the most important one are going to be the pre-market gainers. Okay, now this is how I got those 2 flags right there. I was like, whoa, these things are way pumped up, and I did a little research. There wasn't really any news, and I was like, or with the BuzzFeed, it was like, oh, the only news is Vivek Ramaswamy said that he's going to go ahead and buy. He invested a bunch of shares. Okay, but it's still a bad stock, so put it down. So anyway, looking at some news in the morning and seeing these pre-market movers and make sure they don't have news behind them, make sure they don't have an earnings report behind them. But if they're just sitting out there and they're pumped for no reason, they're gonna come crashing down. Now you can see the price here, guys. If it's not over a certain price, you're not gonna have options. So most of these plays you're not gonna be able to play. And I also would just say, hey, listen, if it spiked, 15% or less, not even a big deal. We want stuff that's got a big, big, big candle because we know that's a squeeze. I want 50%. I want 100%. Then I know I want to jump in on puts. Make sense? Okay. So we're going to go ahead and move on. Short plays are done. You guys utilize this to go ahead and find the squeezes as they're happening. Now, if you guys have not seen my masterclass and you have no idea how to play short squeezes, or you're still not having success with them, please, I suggest you guys go check out the masterclass. I broke down like 5 different ways you guys can play them. I broke down how you can find them, to make a watch list ahead of time that you can just keep looking back on. And I also told you how to identify when they're actually breaking out. So, use those tools plus the new stuff that I'm throwing to you here today, and over time. And yeah, you guys will get a lot better at this for sure. Uh, Unfortunately, I don't have an amazing put story, even though I completely called out those dumps perfect. But hey, you know what? Sometimes that happens. Like I could just say I tested it, right? So anyway, the second part of this we're going to talk about swings. Now, how we do our swing trades is that we go over here to FinViz. Now, I'm going to be honest with you guys. I seen a video from Sean about 3 months ago. Yeah, roughly 3 months ago, 2.5. Okay, and he explained how FinViz screeners can be used to find stocks. Well, I plugged in what he told me to, and it was like magic. I'm not even gonna lie to you guys. I'm waking up morning after morning to 30% gains, 70% gains. I'm like, how the heck? So the combination that you see here it works, okay? And I used to have it logged and everything, but I'm starting over with everything. I believe the past is the past, and now I'm here at Tradecaster. I want to prove to you guys my worth here. So I'm starting everything fresh. That being said, I could maybe start logging these wins too, because I actually haven't been doing that. But I'm just enjoying them, man. I'm feeling really good. It feels good to be right in the stock market every once in a in a while. Things have been really consistent lately, and I just think that's really neat. So anyway, without further ado, here we go. So what we're looking for on this, guys, is we're gonna go ahead and just put this in. Now I did modify this just a little bit, but this is basically exactly what he told us to do. So with the call swings, what you're looking for is the change from open is down, the performance is down, and the RSI is oversold. Okay, that to us tells us that this thing is just a beaten down stock. Okay, over $20 because we're not playing small caps on this. Relative volume over one because we really want to be able to get in and out of the play. We want the some volume, and the optionable tab because we're doing swing trades. The one thing that's different here, one of these things is not like the other. What is it? What is it? What is it? It's the insider transactions. Okay, so the insiders all of a sudden, hold on, we got cats and I got little cat fur. Give me a second. They always get me. Okay. So the inside, sorry. So the insider transactions over 5% indicates that something's happening. Okay, the stock sucks right now. It's getting beaten down. Nobody wants it. RSI oversold, but insiders are starting to add. Now, what's an insider? It's a 10% shareholder. It's a director. It's a CEO. It's a CFO. It's a VP. Somebody on the inside for the company that is being awarded shares as compensation. Okay, so at this point, guys, we see that there's absolutely nothing on this list. Make yourself this list and give me a second. Okay. So make yourself this list and just check it throughout the day. And then it'll allow you to kind of keep an eye on some plays. Sometimes they're just not available at the end of the day. Sometimes they take a little turn at the end of the day where you would have already been in it, stuff like that. So we're, on the put side, we're going to just do the complete opposite. Okay, we got stuff that's up in the air. We got the performance going upwards. Excuse me. We got the RSI overbought, so it's at the top, right? Over $20 is the same because we're not playing small caps on this one. Relative volume for the same reason, optionable for the same reason. Insider transactions, though. That's the difference. Insiders are reducing their positions. Okay, so let's talk about it. Now, the only thing that we don't play here, guys, is earnings plays. And the reason we don't play earnings plays is because I don't think I don't think an insider getting rid of some of their positions after an earnings play indicates any sort of insider information or involvement at all. I think what is going on is that they just seen the price spike to a price that has maybe never been before, or maybe it's just hit a high that it hasn't seen in months or years. So as a employee of the company who's being awarded shares as compensation for your employment there, why wouldn't you just go ahead and take a big fat chunk and sell it right then when you see the price skyrocket, right? So it's just profit taking to me. It's just smart, when you talk about stocks. So earnings we just avoid. Okay, so we're looking for stuff that's on a quick tear. This is an earnings, so we do wait. Okay, so earnings we'll wait for let's give it a couple days. Let's give it a week or two. Let's let it consolidate. Let's let it figure out what it wants to do. And at this point, it does kind of look like it's making its way back down. But I would want to see some pretty dramatic movement before I would want to jump in that play. Once again, earnings just avoid them because you'll find these big rips and pops. Like this is still post earnings. It's still trying to find its way, right? But you'll find these. Oh, you know what? That looked really overextended. I would actually go ahead and add. Sorry. I would add that one to the list, though. I had clicked the same one. Yeah, flex. I would probably add this to the list. I feel like if you see it lose momentum and want to come back down to the trend that it was in a big, like snappy fashion, this could be a good put opportunity for sure. But with it already having the momentum topside, we don't trade against the momentum. I don't really know too many successful traders that do. So, that's not something I'm interested in. But adding flex to your watch list, keeping an eye on it, waiting for it to kind of even out, maybe some high top wicks and then some downward momentum. Sure, why not? I don't see why not, right? So, hey, Charting Queen, nice to see you. So yeah, so sorry, Charting Queen. We're actually right in the middle of just talking about some insider transactions that we use for swing trades. Now, everybody, for these swing trades, what we're looking for is about 27% to 35% on the take profit and on the stop loss. So when I ran this system, right when Deck suggested these, I went ahead and ran these, and I was getting about 70% success. And on options, it's almost unheard of. On swinging options, it's especially unheard of. So to wake up and keep seeing those big green numbers consistently felt really good. And then because I was testing, I was able to stay in the positions and see like how far they would go. And a lot of them went up to 100, 150%. So it was really cool to see kind of like, where you could land with these things. So once again, earnings plays, we just avoid them. It doesn't really say the insiders are doing anything weird. They're just taking profit earnings. So every one of these is an earning play, guys. Unfortunately, there's no swing trades that are really calling out to me right now. Same thing with yesterday. We really just didn't have much. So we'll go ahead and close that part. Now we're going to move on to the straddles. So let's talk about yesterday's plays. Okay, straddle city. So if you guys were here, if you've seen it, we did a straddle on SPY. The way that, actually, I'll explain how we do them here in a minute. But anyway, let's just show kind of the results from yesterday. So when we woke up today, our spread was technically down $16.50. You see what the not the PL for the day, but the PL for the open is what we're looking at. Okay, so we're down 16.50 when we wake up. Okay, but what we do see is that the call side is in the money and it's made some money. And if you guys were here at the opening bell, it just started tanking. So the first thing that you would have wanted to do is close this position as quick as possible at about this amount. So let's say we got about, $68 for it, because that's where I wanted to close it. Okay. So at that point, the put was still in play and it just kind of tanked and went down, right? So about a half an hour later, it started losing strength to the downside and started headed the other direction, back up. Now, when it did that, I went ahead and took this screenshot because this would have technically been when you guys closed that position. So the put side would have lost you $25. The high side would have gained you almost, a little over $65. So we made about $42 on the play. Considering the spread cost us about $300 to enter, we made roughly 10%, maybe 11% on the play. So good job, everybody. We won. However, if you guys were the blue collar guys we were talking about, who you can't be here in the morning to play it out like that, and you had to close first thing in the morning, you took a loss. So because the win was very minimal compared to where I think it should have been, and I'll talk to you guys here in a minute about why we didn't win as much as we should have. So because the win was so minimal, closing at that position, losing $20, or closing them just at the opening bell, the call, and then the put 30 minutes later and winning $40, I'm going to just call that a push, because 10% gain is awesome, but that's not what we're looking for with these. We're looking for, big home runs, right? So it's awesome we didn't lose any money. Remember I talked to you guys about yesterday, and if you haven't seen my video from yesterday, we were talking about how the put side and the call side complement each other and they protect each other a little bit. As long as you're a few days out, the time decay will hit you a little bit, but it won't be much. So if you're ever wrong and it just kind of treads water, which is the only way you can be wrong if you're on both sides. If it just kind of treads water right there in the middle, then you're only going to lose 10 or 15%. So gaining 10 or 15%, I feel like is just a push. That's even Steven. Now, why didn't we kill it? Why, when we woke up, when we were in the money, how come this wasn't worth 300% like we've seen in the past? Well, it's because we are at all-time highs. And at all-time highs, things become a little bit tricky. All of a sudden, the contract makers, the ones that decide the value of these things, they have to reduce the price. It's called VIX, volume index, but it's basically there to determine the fact that they don't want to get caught with their pants down, right? So they got to change the prices a little bit. They got to modify some things because the prices, the price of SPY has been so erratic, i.e., hitting all-time highs. They just want to protect their butt a little bit and make sure that they don't get caught. I'm not sure the logistics of exactly how it protects them and exactly why they're doing it, but that's just something I've noticed, that when you see a lot of volatility in the market, you're going to have these weird option prices. And a lot of people that play options will tell you just to avoid, playing on those times. So anyway, long-winded story, getting at the fact that when we were in the money this morning, we should have made a bunch of money. We should have been up 300%. Now, I got something special for you guys, though. If you didn't close this morning, let's say you had them diamond hands, right? At 2:30 today, that put contract was worth $128. So taking a win on the call side for 60 And if you somehow you knew the trend of the day, you knew it was due to drop, you knew that all-time highs means it's probably coming up, whatever your mindset was, and you held on to this contract, the put side of that straddle could have been gold, and you guys could have hit it nice, right? So, it's really just about how you guys played it. Like I said, I'm not going to tote it as a big win or anything like that. I just really want you guys to see how these straddles can be played out. How, depending on how you play them, you might not even make any money on them, or if you played them right, that's always the thing, right? Hindsight is 2020. So when you go back and look at it, oh, this is how I should have played it. You never really know. So, I say at the end of the day, it was cool. We talked about it yesterday. We wanted to really just test. We didn't want anybody trading this because it was, a new concept. Um, if you guys didn't see this yesterday, actually, I did want to just go over with you guys that we really focus on, or how we do this, right? So we focus on the straddles that are, sorry, we focus on economic calendar days, and we focus on the top 5 earning reports for SPY. So the top 5 companies that are in SPY, when they have their earnings reports, we can play this, and we play SPY. And normally this works actually really well, but this all-time high thing just kind of messed things up. But anyway, so the top 5 companies, and then we just do these economic days, right? So there's certain economic days that happen, aftermarket or pre-market, and they have a tendency to move, prices, before anybody can get in or out. So grabbing a straddle on both sides, I'll explain exactly how we do it, but grabbing one on both sides might mean that you can catch yourself a nice juicy swing. Now, I want you to test this first, and I want you to just spend some time learning which earning reports cause the biggest swings, before you start putting your money in full port every time. But I mean, if you can literally, after, just looking at them for a little bit, see that, oh, well, hey, this one just always seems to move it really high, or really, it doesn't matter what direction, we're on both sides, but it moves it a lot. That's what we're looking for a big swing. So we can capitalize on that if we can kind of just hone in on which economic days are giving you those big swings, right? So real quick, before we move on to the credit spreads, how do we actually play these straddles? So what I personally love to do, and guys, I did want to note that all of this is my stuff. Like, I mean, I have not taken anything from any YouTubers or anybody else's stuff. I've created processes based on what I see, so the straddles and stuff, I came up with this, and I kept testing. So I initially started about 5, 7 strikes away. Now here's the rules. So we're 3 strikes away. We're 3 days till expiration. 3 days till expiration means that the time decay won't hurt us too bad, but it's not that expensive to get in. Maybe a smaller account still has an option to get in, right? So we're looking for 3 strikes. We're looking for 3 days till expiration on both sides of SPY at the end of the day before the economic date. And that's it. Figure out the next morning the best way to close them, how they normally play. Test, test, test. Don't jump into anything until you test. Okay. So definitely really a lot of fun. I'm glad that, we got some wins. Oh, wait, there was one more. Okay. I forgot. So yesterday we also did this one. Okay. So we got into this one, and I believe, and this was just for fun because leveraged, one side's not going to protect the other. We were talking about how SPY, your one side's going to protect the other. Well, that didn't happen because of the VIX, but it definitely didn't happen on a leveraged ETF. So we got into this one just for fun right at the end. We ended up doing pretty well. I don't remember at what point I snapped this screenshot. It probably could have did better or worse at different times during the day, but it was really fun just to kind of see how that worked. And overall, I think we were in for about $60. So we made about 50% gain, but it was just for fun. I just really wanted to see, I've never done that before. And we were like, well, what happens if we straddle this? And, I went ahead and did that for everybody. So, all right. So the last play of the day, or the last section that we always do, are credit spreads. Now, if you have never played credit spreads, you're not playing today. Also, there's a good possibility I might not be playing today, and I'm going to tell you why. Now, yeah, it looks like we're not. Okay, no, sorry, that's not the right candles. That's 30-minute candles. Of course, they're going to have bigger. Okay, give me a second. Okay, so this is actually good. Okay, so what we're looking for is we're just looking for like dead volume, right? So as a buyer, as an option buyer, and this is, if you guys haven't seen my masterclass, go check it out. It's going to cover all this, but I do have a minute here to kind of go over this with you guys, so I'm going to show you. Okay, so as a buyer, okay, The only way you can get paid, let's say you got a call here or you got to put here, okay? And the price is here. The only way you can get paid is if the price heads in a rapid direction towards where you picked, okay? If it goes literally any other direction, you lose, okay? Now, same thing on the put side. The only way you're getting paid on that put is if it heads that way in a rapid direction. If it decides to go here, but then 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 here, and then finally goes, you can still lose, right? The only way, because the time decay or wherever you might have picked your strike price, but by selling options, we're flipping that on its head. Okay, so when you pick here, as long as sorry, you know what? Let's get this right. Sorry. All right. So when you pick here, as long as it doesn't cross that by the time the option expires, you win. So when the price was here, rather than saying, okay, this is the only way I can win, which by the way, now that I explained it that way, doesn't it make sense why you're not winning that often? Doesn't it make sense why like you're only getting about 15%, maybe 30% of your option, whenever you swing trade, especially swing trades are very, very tough. All right. So with a sell, it can go anywhere from here down. Okay. Anywhere from there down, we win. That's how we flip it. That's how we go from a 10%, 15% win rate to an 85 to 90% win rate. Now, how does this sound like the most miracle thing that you've never heard of? And why do you think, oh my gosh, why do I not try? Because it's not always peaches and cream, right? This is the most risky thing that you will ever do on the stock market. Well, I can't say that. Okay. Sorry. Top something, arguably top 3 riskiest things you could possibly do on the internet. And I'll explain in the masterclass we went over why. We got to get into the actual spread now. We're going to go into it, but definitely check out the masterclass. It'll get into it, guys. If you have never done this before, you are not trading today. I will put up a little note for everybody here in a minute and keep it on the screen. That way everybody remembers that they're not trading today. Okay. So you just need to learn the process. Also, we're not logging today's win. If you weren't here before, we are actually starting a brand new $5,000 account challenge on Tuesday. So on Tuesday, we're going to go ahead and start it off. I just wanted to show you guys kind of how this would go, okay? So on a day like today, would I normally trade? Heck no. And I'm going to tell you why. Because even though these candles look like crap and maybe the volume really has died out, look at what happened today. So just the last couple of days of madness are going to change the value of the contracts. It's called VIX. We were talking about it earlier, okay? It's the volatility. It changes the value of the contract. So when I'm telling you that I'm getting 90% wins and I'm telling you that I'm doubling my account every 3 months, the only way I'm able to do that is by avoiding certain days. I don't get into a play every single day. There's some weeks where I barely trade twice, I feel like, there's FOMC. During FOMC, we don't trade at all because of the volatility, because things are going banana sandwich. The earnings plays that like this, the day before or the night before, like I like to get in right around 3:30 to 3:45 on this play. So when you start thinking about the fact that the volatility is so high, well, during the day, what happened to this put contract or what happened to these call contracts? They got chewed up. So right now, if we wanted to get it on the call side, we would probably have to get so close to the actual, excuse me guys, I'm so sorry, we'd probably have to get so close to the actual price right now that we would be risking a quick loss. Why would you do that? Now on the other side, the put side, what do you guys think about those contracts? Well, they're inflated right now. They've been pumped up by the movement all day, so we can probably get pretty far out. But how easy is it going to be to keep pumping that already pumped contract because of the the expected movement based on what's happened. Oh, speculative. I like that. The speculative movement based on what's happened today. Your options are going to think, hey, this stuff's going to keep coming. So even just a small swing in that continuous direction, continuing that move, is going to make the options contracts think, oh crap, here we go again. And they're going to blow it up quicker than they normally would. So to go from 10 cents to 15 cents, which is what we look for on these spreads, okay, to the 200% stop loss or 300% stop loss that we have assigned for ourselves is so much easier to do on both sides today. One, because we have to get closer just to get a fill because these contracts are so beaten down, and the other because of the speculative value of, or yeah, of the movement all day. So we're going to take a look at this, guys, but I really don't feel like we're going to take a trade. I'll be honest. But if you guys are here watching, I want to show you just a little bit about how this works. The masterclass goes over every single thing. And the reason I say you can't trade until you watch the masterclass is because of how risky this is. If you miss even one little detail about what I'm doing, and all of a sudden, yeah, charting queen, and all of a sudden, I love that. You guys inspire me. You really do. I love being here every day with such gifted traders and technical analysis streamers, and it's just I feel like I'm amongst kings. And when you're around successful people and winners, that it reverberates, right? It's that old age old adage, you show if you want to see somebody's future, show me their friends, right? So if you hang out with winners, you're going to start being a winner. So I love being a part of this community, and I feel so blessed that I'm here with you guys. So anyway, so the SPX, like I said, I don't think I'm going to take one, but what you would do is you'd go in here and you would press vertical for the vertical spread. Now, selling options as opposed to buying options. Why would we do that? Went over that in the masterclass. Why we wouldn't just sell options and why we would rather have a spread to sell options. Well, I can show you that right here. Okay. So let's say I wanted to get into a play today, and let's say we were going to go puts, and we're going to go down here to like 52.40, 52.35. Okay. And as we went over in the master class, you always sell the leg that is closer to the price. So if you're on the put side, your sell is going to be above your buy, and if you're on the call side, your sell is going to be right below your buy. Okay, so that's how that goes. But anyway, so at this point, we would be looking at this. Sorry, I didn't want to do that first. I want to show you guys the option. So let's say you wanted to go ahead and just sell the put that we just had in mind. I think it was 45, right? Okay, so we're selling a 45 put. Now, hit review. What does this say? This says in order to initiate this trade. Oh, you know what? Let's just do one. We only want to do one contract, right? No, that's right. We were going to do 10 contracts. We're doing 10 contracts. Okay. So to initiate this trade at 10 contracts, they want $1 million in collateral to pay us 150 bucks minus fees. Now that's I don't know anybody that crazy. I just don't. Okay, maybe those GameStop guys. They would probably be down to do this. But anyway, so this is why we don't just sell options right out, because you are expected to cover the 100 shares per contract at whatever the strike or whatever the value of the stock is at that point, right? So this gets us out of that. This is the whole point of spreading. So now, because we're entering a buy and a sell at the same time, the buy contracts and the sell contracts and the difference between them becomes your new risk and your new collateral expected. So let's go back to that same trade, 52.45. Sorry, little right click action there, 45. And then we're going to buy the one right below that. So 62.40 is right here. Okay. And it was a put. Okay. So now we review this. What does this say? Now they only expect us to come up with $5,000 in collateral for that same exact trade. Okay, so that's why we do spreading as opposed to just selling right out. So when we get our normal 10 cents, which is the base that we're looking for, we don't do nickels, we do 10. So at the base we're looking for, at a $5,000 risk, a $5,000 account challenge, when we start this on Tuesday, we'll be making $100 a day minus fees. Now, if we get in on 15 cents on that same side, we'll be making 150 minus fees. If we get an iron condor, which means we get to get both sides, the call and the put, because it was just a sideways day and we got fills and hey, we're in, right? So at that point, you can double that. So now we're at $300 a day minus fees. Okay. So what happens after about a month and a half? So we're a month and a half in. Now we're at $7,500. We can start going up to 15 contracts. And I'm going to show you guys how that works. Okay. Let's go ahead and go back since we're not doing a spread today. Let me just show you guys this. Okay, so here's my history. Here's my proof. Okay, so normally what I would do is I would just go to my account and show you my account history. Unfortunately, literally last week, Charles Schwab took over Thinkorswim from TD Ameritrade, and they erased everything. So I have a couple screenshots. It's not as good as me just showing you my account. I really wish I could just show you my account, but whatever. Here we are. This is what it is. Okay, so when I started this journey, okay, so I forget exact. Oh, I wanted to show you the growth. Okay, but before I show you how I grew, just look at the consistency here, guys. Okay, two things I want to note. One, losing days. You lost 200 bucks. What happened on that same day? Well, actually, we started on the 22nd, so I was testing something else that day. Let's do the 22nd. So on the 22nd, we took a big old fat loss because I got in. It doesn't matter why. Okay, so on that same day, $450 loss. We gained 150. We gained 200. So we made back $350 on the same day that we lost 450. So these iron condors or the ability to jump in the other side will protect you because you're being paid premium on both contracts. That gives you money in your pocket regardless. So the winning side will give you 100%. We're doing 0 days till expiration. So at the end of the day it expires, you get 100% on that one. And then on this one, you lost a little bit, but they paid you right as soon as you entered in. That's how it works. You don't have to pay to enter like a buy. They pay you to enter. It's a sell. Okay. So taking those premiums and adding that into my wallet, I only took $100 loss that day. So let's talk about it. We're going to come down a little bit more, right? So from the 22nd, I did not have another loss. And by the way, yep, just keep coming. Do. Ignore this 600, by the way. You'll see that I got into that for more than 10 or 15 cents, which just means I was testing something else. And there's a few 20s where I was just kind of like, oh, they gave me a better fill than I expected. I put the 15-cent limit and they gave me the 20 is how I got these 20s. Okay, so I mean, I am 15-cent limit still. But this one here, this big old, what is that, plus 600, just ignore that one. I was just testing something else. But you guys can see the consistency. You can see how the gains start stacking. And in just a little bit of time, you're protected at negative 200 to 300%, which would be, at this level, instead of making 100, you would like lose 200. You're protected. You're good. You're in the green, right? So come all the way down to 318. So from the 22nd to the 18th of the next month, I didn't lose. It was literally a whole month I didn't lose. And on that 18th, what happened? I gained 50 and I gained 100. So the day that I lost, I made 50 bucks. I made it back by entering the other side. Do you see how this works? This is cool, right? So I keep winning. I keep winning. Now ignore this negative 520 because that's not a spread. I had entered it as a test, and you'll actually see that I was able to close that position for a $200 gain. But that's not what we're talking about right now. So you keep on coming down, win, 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 and we hit another loss. And what happens? It's 411, guys. It's another month away. So at this point, I'm getting one loss a month while I'm just stacking win on top of win on top of win on top of win. But no, you'll also notice that I'm not trading every day. There's a lot of things that I'm seeing, like the volume or the economic, something coming the next day. FOMC, ooh, stay away from FOMC when it comes to these end of the day spreads, right? So there's stuff that I'm just avoiding, and that makes me more successful. It makes me more profitable, right? And that's the kind of stuff that we're going to be going over with the next 3 months here in Tradecaster while we double this $5,000 right in front of your guys' face. All right. So the last thing I want to show you guys is after 411, we did get another loss here at 426. So it's not always a month. But on that loss, what do you guys see? Negative 300, positive 150, positive 150, positive $225. So on the same day, which I re-entered, I probably shouldn't have, but I knew because of the huge swing that I could get down really, really far and be protected by some more supports that we'll talk about. And yeah, I just felt good about re-entering. I normally don't, but I was able to gain $225 on a day where I actually lost, and we were wrong. So I'll go over with you guys the actual strategy day by day as we do it, as far as what I'm looking for the entry. But everything else you guys want to know about selling options, well, not everything about selling out, but selling options when it pertains to this strategy, everything else you want to know about my strategy, how I was able to come up with this kind of gains consistently doing this, just go watch the masterclass. It's right there on my YouTube channel. Go to click videos. Boom. I only got a couple videos there. I literally just started the channel. So, or I took it from a slave channel that I made a long time ago, and I just went ahead and created this about 3 weeks ago when I started here at Trade, or right before I started here at Tradecaster. I wanted to prove to Deck that I knew what I was doing, so I started it up. But anyway, being long-winded right now, guys, I'm going to let you go early today. No spreads because of the volatility. What we're going to do is we're not going to have a show tomorrow at all. I want to just enjoy the weekend. I had an amazing week trading futures. I have a feeling that I'm about to be making an unbelievable amount. The future is really bright with futures, is how I'll just summarize that. So I really want to take a day off to kind of just decompress, and just really just kind of do some relaxing and get ready, because next week we're hitting the ground with the $5,000 challenge. Next week I am going to take my futures account plus $1,000 by the end of the week for sure. I am just so fired up. I'm so pumped at the future. We're going to get some more of these short squeezes on their way down. We're going to put them on down, and we're just going to have a lot of fun. I'm actually having more fun right now streaming and trading with you guys and hitting these successful home runs over and over and over again, which I'm putting a lot of them. If you guys are here in Tradecaster, I'm putting them in the profit section. I'm trying to highlight them as much as I can over there, but we've been hitting some good ones, and that feels good. Just getting on stream for the first time, it's a little nerve wracking. You don't know if you're going to start winning right away. What happens if you just catch a little bit of a losing streak right when you start telling people how to trade? I would feel like a jerk. So if I didn't have the consistency that I have, and I haven't gotten to where I am, and I'm not basically anything that I'm still testing. I will tell you I'm still testing. It's not ready yet, but the overnight swings that we're testing at like 70% success, absolutely. The insider transactions works, and I think it's because it's in correlation with the actual RSI of the stock. So if the stock's pumped up already, and the insider transaction on top of that, right? So I mean, sometimes maybe it wasn't even the insider, maybe it was just due for a fall, but I really feel like that RSI indicator in there is like the one trick that really makes that work. So the swings work really good, the straddles work really good, the spreads work really good, the short squeezes work really good. Everything's really just working consistently. So I'm gonna keep throwing them at you guys. Fastballs and heaters. I do hear some bings right now. I accidentally minimized that. Unfortunately, I was about to wrap it up, but let me see if we got a little Q&A going on here, guys. All right, so what's going on here? Charting Queen made a big old bag today. Congratulations, congratulations. Yeah, charting queen. I think it's just a good idea for people to test when they, because like there's little things like you have to buy yourself out of your position, so you have to have a little money left in your contract, for that. I got caught in an AM contract the other day, which I've never even heard of. So I've gotten caught in some things where I didn't expect things to play out that way, or I didn't understand why they played out that way. And I'm just glad I was testing. Oh my gosh, I'm glad I was testing, because if that was a real account, I would have cried. You know what I mean? So definitely, start out with like, one contract, $500. If you're getting that 10% a week, which is what we're looking for, heck yeah, then step it up. But yeah, excited to see you teach futures. Not many do that. Okay, Jared, dude, I have found an amazingly simple approach, and I'm not. it's testing, so I'm not ready to dump it on you guys yet. But I mean, if I'm able to consistently grow this account by $1,000 a week, I'm going to go ahead and grab three. I'll triple it. I'll get two more accounts, and then I'm going straight to 10 accounts, and I'll literally be making do the math. I'll be making $10,000 a week. So I found something that's super consistent. I tested it last night. Actually, it was 51 wins and 7 losses. So yeah, definitely. At that point, it's just risk management, right? Don't let one trade blow all the rest of them. So, get consistent wins. Today, I ran it. I hit 12 wins and 2 losses in 14 trades. So, wow. Unfortunately, one of the losing trades about wiped out my entire account. I'm sorry, not the account, the gains for the day. So it really comes down to um, you know, today I set a rule. You know, I'm not going to do that thing where I keep pulling back my stop loss because it's going to bounce. It's surely going to bounce. Dude, momentum's headed your direction. Run. So I'm just going to cut the losers a little quicker. I don't want to lose more than 2 successful trades. I figure I can make 80 to 150 a trade. So no more than like 100 to 120 per loss. Like I can't justify any more than that. You know what I mean? So, and especially if you're not getting losses that often. But see, the thing that stinks is you guys know how this works. You set your stop loss, it becomes a loss, and then it turns into that big old gain that you were waiting on, that you predicted, that you were completely right about, but your entry was just a little early. So then you start FOMOing in because now it's dumping, but for some reason it's going to consolidate right at that point you FOMOed in. So it comes back up enough to make you think that it's lost momentum. I've been playing. Oh my God, I've been losing my mind. So now I'm at like 1 minute candles. Give me like a little something. Give me some money. That's all I want. I want like a good little, 50, like I said, $70. $150 at the most, and I'll watch it bleed for an extra hour. And no FOMO, guys, no FOMO today. I did really, really good. As a matter of fact, I even shut my computer off at 1:30 because I don't want to trade like that. I don't want to sit here the whole day just staring at my screen. I'm only doing this for one reason, and that's to have more freedom in my life and be able to enjoy my life more. So shutting it off at 1:30, getting an after lunch snack, taking my dogs outside. I read a little bit of my book, just something to kind of decompress really helps. So I'm going to really focus on hitting some good like home runs, maybe like 3 to 5 a day. I want 3 to 5 really good. And also I found that oil and gold have these really long streaks that you can capitalize on. So if you do have diamond hands, one of those plays a day could give you $1,000 a day. I did the math. It was stupid. Like, I don't have diamond hands. I am freaking out every second. I am nervous. I'm just, this is really important to me. Once I'm later down the road and I have $100,000 in my bank account, I'm not going to trade the same way. But I'm like you guys. I'm like a lot of you guys, not like everybody. I'm not like Trading Queen here. Oh my gosh, I can't even imagine. Or Charting Queen. I can't even imagine what her accountant is looking at when he's looking at the return. Like, what the heck? But me, I just, it's minimal stuff. It's all just incremental stuff right now. So once I break that threshold and I have the money to kind of have the diamond hands and be a little more ballsy, and you kind of pull back your risk a little bit, maybe I can get something that I can tell you guys about that's like, oh my God, I made $1,000 in one trade. And so far, it's not that. Like today at the end, it was plus 65, plus 80, plus 50, negative. I think it was almost $300, which was the one I was like, I can't let that happen again. It took away everything. And then immediately after that was 80, 30, 30, 40, 30. You know what I mean? So like these are all gains. I was hitting it. It was cool. A lot of those were panic closing. Like I said, I gotta, I'm kind of like deck on that. Once I see the money, I don't want them to take it back. I'll just take it. You know what I mean? Even if it's, whatever. So anyway, guys, I'm being long-winded. I promise I wouldn't. We're gonna go ahead and start Tuesday. We're gonna go ahead and hit the ground running. I'm really excited about that. I want to be able to, like I said, this is gone. Here, watch. I'm gonna do it right here for you guys. Gone. Okay, let's get rid of all that stuff because that's the past, and this is the future. So we're gonna go ahead and do the $5,000 account duplicated, or 5,000 to 10,000 in the next 3 months for sure. I almost did it in 2 months, but then I had to go out of town and then some other stuff happened. So if there's anything else, guys, you need from me, just let me know. Really excited about the future, like I said, and I hope everybody traded really well today, made a lot of money, and Scrooge, max bucks. Out.
On the floor, we'll be watching all night. We ain't here to hurt nobody. So give it to me, give it to me, give it to me. Wanna see you work your body. So give it to me, give it to me, give it to me. Always in the party, everybody put up their hands. I get a $500,000 for my feet, you get a couple grand. Never gonna see the day that I ain't got the upper hand. I'm respected from California, ain't way down to Japan. I'm a real producer and you just a piano man. The songs don't top the charts, I heard them, I'm not a fan. Niggas talking crazy, I'm the one that gave them their chance. Somebody need to tell them that
little step.